Hi everyone, this is Andrew Bloom of Profit Logic. I am a professional bookkeeper as well as a PhD student in business. Today we're going to dive into a must-know topic for every business owner. We're going to talk about the top 3 financial statements you need to understand if you want to run a successful business with at least a basic understanding of your business's finances. I won't lie, financial statements might seem intimidating at first and kind of boring, but they are crucial tools for making smart and informed decisions about your business, especially if you're going to seek for funding from sources like a bank or private lenders. They also act as trackers of health for your business and give you an idea of how much profit you're actually taking home at the end of the day, as well as what your cash flow is like in your business. I promise I'm going to make this simple and easy for you to understand, and we'll try to get through this as quick as possible so that you can get back to working on your business. All right, so let's jump on the computers. I'm going to show you in QuickBooks what the profit and loss statement, balance sheet, and cash flow statement look like. Let's get started. Okay, so in order to understand the 3 most important financial statements, your balance sheet, your profit and loss, income statement, and your statement of cash flows, we're going to come to the reports section of QuickBooks, which you can find on the nav bar to the left. We'll begin by talking about the balance sheet. So just to note, I have these all listed as my favorites. If you want to include these reports as your favorite, so it's at the top of the page of the reports section, just go down, find each report, such as here's the balance sheet under business overview, and click the star button. Make sure it's toggled on so that there's color in it, and you'll find the statement of cash flows here and your profit and loss here. So let's begin by looking at the balance sheet. So here we have the balance sheet report. And with the balance sheet, this report is just a snapshot of a moment in time for your business. So usually just for the day, a certain day, you can look at the balance sheet of a business. And the reason why it's just a snapshot is that the balance sheet is trying to show you how much your business is valued. So each of these reports I'm going to tell you about, they all relate to the accounting equation. The accounting equation is something you should know as a business owner. It's very simple. It's merely assets equals liabilities plus equity. Let's break that down. So your assets are things your business owns. Your liabilities are what you owe to other people outside the business or other businesses. And equity is all the value that's left after you take out everything that you owe. If you were to close down your business that day, then your equity is going to be what's left over after you pay everyone off. Now, the thing about assets is that we're tallying up anything that has monetary value in your business that can be cashed out, if you will. So for example, you have your bank accounts, which actually hold physical cash. You have accounts receivable, so this is money that is owed to you by customers. But you also have things like assets, like furniture or machinery. Now, their value doesn't exist in a bank account. It's something that could be sold so that you could get the cash for it, and thus it has a level of monetary value in the business. So your assets are what your company owns. Now, you might be using a credit card, might be paying. It would be a kind of ideal to have no liabilities where you don't owe anything in your business, but in all likelihood, most businesses will have some sort of debt, some kind of note or credit that's owed to people who have offered their services or offered capital. And at some point, all these folks need to be paid back. So that's what liabilities entails. You'll see things like a credit card, notes payable, loans from members in the business. And lastly, we have equity. This would be any retained earnings from the business you do. This would be the money that you as a member of your business have put into the business that you can also take out. And this is also technically your profit. If you want to take money out of the business, this is the category it would be coming from. So again, the balance sheet is just looking at the equation assets equals liabilities plus equity. And kind of like an algebra statement, you can shift these around. So equity equals assets minus liabilities. Liabilities equals equity minus assets. So just remember that your balance sheet is your baseline. This is everything that's in your business currently. It is the big overview of everything your business owns, everything it owes, and all the equity that it has either accumulated or earned. The balance sheet is something you'll want to look at to understand, does your business have value? If you were to sell your business, in what ballpark are we going to be looking at to determine how much it's actually worth? And your balance sheet will give you an idea of what that worth is. I highly recommend looking at a balance sheet at least once a month, at the end of the month after your books have been closed for the month. And this is something your bookkeeper would happily send over to you and should be sending over to you at least on a monthly basis. Now, if you haven't heard from your bookkeeper in a while, I'm gonna be honest and say that's probably not a good sign. If you need a new bookkeeper, or if you've never had a bookkeeper and want someone to be on top of the details of your business's finances, then be sure to look in the description box below. You could find a link to the Profit Logic homepage, and there you can schedule an appointment with me so that we can go over how I can help you as a bookkeeper and get you a quote for what working together would look like. Now, moving forward, we'll go back to the report list. And next, we're going to look at your profit and loss. Your profit and loss statement is also known as the income statement. Unlike a balance sheet, profit and loss covers a period of time. Usually, most businesses will look at it on a monthly basis, and it's worthwhile to track what your profit and loss looks like from month to month. It can give you an idea of how your business is performing, how much you're doing in sales, how much you're spending on overhead. So looking at this landscaping business's profit and loss for the month of January, and there weren't many transactions for this business. By the way, this is a fake business. It's something I put together for a capstone project for one of my accounting courses. And here you'll see there are a couple of main sections. There's income and expenses. Your profit and loss at the end of the month is the simple equation of income minus expenses. After you take everything you earned for that period of time and you subtract everything the business spent in that period of time, then you'll see your bottom line, which will be your final profit or your final loss for that period. Now, under income, you'll see all the different kinds of revenue you earn depending on how you categorize your income in QuickBooks. For this landscaping business, they split it up between maintenance revenue and installation revenue, so revenue for the services, the labor performed, and they sell items in the business as well. They keep an inventory. So here we can see the total income for that month. And then under expenses, there was just one expense for advertising, which left a total of $300, and their bottom line is the difference between those two amounts. So the profit and loss, otherwise known as income statement, that is something you should be looking at least on a monthly basis. It'll give you an idea as to how much profit you made or how much you've lost over a very specific period of time. It could be a month, you could set it to a quarter, it could be for the year. So your income statement is something you'll want to track over time to get a feel for whether you're growing as a business or if you're hurting and maybe it's time to cut expenses or find new ways to generate profit. Next, we're going to look at statement of cash flows. Now, statement of cash flows is probably the least important of the three statements, but it's particularly useful for understanding the flow of money in your business and over a given period of time. It's helpful for understanding whether you have cash available to invest in or growth in your business. You can use it also to understand whether you're generating enough cash to pay your employees, to pay yourself. And it's different from an income statement because it's looking at the actual cash that comes and goes. For example, on the P&L statement, you could be generating a lot of sales, but if the majority of those sales are through invoices and people aren't paying you right away, then you might not actually have enough cash in the business for all of the underlying operating expenses. The cash statement is going to show you income from your operating activities. It can also show you any money coming in through financing activities, such as taking on a loan. You'll also see any adjustments in your inventory. And the bottom line of the cash flow statement is basically to show you if you minus all your cash outflow from your cash inflow. What do you have left over at the end of the period? So this was an example over 11 months in a business, that basically year to date, but you can also pick any period of time that makes sense for your business, such as for the current month. And it'll give you an idea of what kind of cash do you currently have access to. So that's the third major statement. All right, before we go, we're gonna go over 2 other statements you should be looking at, especially if you are a business that utilizes plenty of invoices, pays a lot of bills. And those 2 statements are your accounts payable aging summary and your accounts receivable aging summary. So if you're sending a lot of invoices, especially if you're a service-based industry that moves very fast, faster than people can pay you money, then you'll want to look at this summary on a regular basis. That could be weekly. If you're dependent on more cash flow, it could be on a monthly basis. So when you check on accounts receivable aging, you can select what report period you want to look at. You can customize how many days each period contains and how many periods you want to look at. So on that report, normally you'll see a list of customers. You can see how much is current, how much is 1 to 30 days late. You can see how much is 31 to 60 days late. And these would be all of your open invoices. So if I saw this accounts receivable report, again, just a note, that's what AR stands for, accounts receivable, then I would want to get on top of who these customers are. And if you click on that number, you'll see the associated journal entry or transaction. And if you had the individual customers listed, you could look at each one and click on those specific accounts. So the other report, your accounts payable aging, is similar. It's just the other direction. This is all the money that you as a business owe to your vendors. Again, you can look at a specific point in time. You'll see how much you're current, how many of your bills that are 1 to 30 days late or more. In this example, we have a bill that's over 3 months old. And if you click on it, you can see the associated transaction. And you can even go directly to the vendor from there, from this report, if you want to immediately address that bill. You'll also see the number of days past due. So again, if you have a lot of bills in your business, then be sure to look at these reports regularly. It should definitely be part of your business's routine. All right, so that summarizes the top 3 financial statements that you should know and get to deeply understand for your business in order to stay on top of your finances and be able to speak about your business in a financial lexicon so that you can approach investors and you can get a good idea of how are you performing over time. If you gained anything of value from this video, please give it a thumbs up or leave a comment in the description to let me know if there's any questions you have. And thank you so much for watching. I'll see you in the next one.